What's up everybody, welcome back to my channel, Earn It, Save It, Invest It. In this video, I'm going to break down my road to 100K or my $100,000 challenge, as well as break down what I think the stock market is kind of signaling to us. There's a few things out there that are kind of showing me what's to come, what's in store. I just want to go over those really quick with you. So yeah, again, just a quick update, week 8 of my 100K challenge, and I'm going to go over the stock market really quick. So go ahead and give this a like and subscribe. It does a lot for the channel, and I really appreciate all of you, so let's break it down quickly. All right, so this is my road to 100K, or the $100,000 challenge portfolio. Right now, as you can see, I am at $8,698.66. I'm up for the week. So HIMS was pretty big for me. As you can see in the 1 week performance, it is at 14%. So that was the big one. Like I said, HIMS will always be a big one for me because it's a very volatile stock and it already had so much of a weight position when I started this challenge. So it's going to have a big effect on my portfolio performance. So HIMS did well in the week, and then of course these are my other stocks. If you do follow, you'll know them, but TQQQ, Nike, Celsius, Meta, Fubo, and Amazon. There's a couple that are missing, as you can see, and I'll go over those here in a minute. Yeah, but so far, I mean, when you look at my 1 week performances, everything is in the green, so it was a good week for me this week. Over the last week, July 21st to July 24th, now, today is actually the 25th, Friday is the 25th. My Schwab account does not show me until it's actually the next day. It does not show me what the value is of the Friday, so it's actually a little bit down. It's not much of a difference, it's about $50, but my beginning value was $8,063. My contribution was $50, and then my investment change, it went up about $528, it actually went up about $570, and then my ending value, again, is around $8,600, $8,700. My portfolio has beaten the other indexes in the last week, 6.5% compared to all the other ones are all under 1%, except for the S&P 500, which is barely over 1%. I'm actually even more than 6.51 because, like I said, I went up today, so I'm probably more at like a 7%. But regardless, I'm beating the indexes, and again, it was just a good week for me. And then as you can see, since I started the challenge, I am up $400 from all my deposits, and then another $887, it's actually a little bit more than that, of course, from my investment changes, and this all started June 2nd. And compared to the other indexes, as you can see, I'm at 11.6%, and I'm beating all of them, the Russell, the S&P, the NASDAQ, and the Dow Jones, which it's actually surprising when you see the Russell is actually beating the S&P and the Dow. NASDAQ is always a pretty big leader, whether it's up or down, but I'm beating all of them. So far, my performance is doing well. I'm at 11.6% over the last 8 weeks. And so, we're going to keep making these moves as much as we can. Like I stated before, I did sell a few stocks. These are the transactions that I made. I did buy Fubo this week. I bought 46 total. Obviously, when you put in a price, in order, sometimes it doesn't fill all the shares in one order. So I got 36 on one, 10 on the other, but that brought my total to 200 for Fubo. And then I sold my EA, and then I sold my SMCI. EA I've held on for a little while, 2 years, and SMCI I just bought recently, and I made a mistake. It has some numbers I don't like, even though it went up like 2%, 3% today, something like that. I want to put my money into something I feel a little bit more confident in. When I see the numbers, I just want to feel a little bit more confident, and I didn't feel so confident. EA, as you can see, I had for 2 years. I bought it at 128, sold at 153, so I got $25 out of it. It's about a 20% return on my investment over the last 2 years. It's not bad, but it's not great. It's definitely not great. It could have been a lot better if I had put that into something else. So I decided to move on from EA. It gives a very little dividend, I believe, and I'm okay with getting rid of that and putting that money somewhere else. Same thing with SMCI. I bought it at 48, sold it at 52 for a total of $4 profit. And it was like a 7 to 8%, profit. And I only owned it for 16 days. So, but again, I wanted to move on for now. And, and I'm actually, if you look at my cash position, I have a little over $200. And I think it sits a little bit over 2% of my weight of the portfolio. And I want to have about 2% or so of cash available. So I'm thinking about holding off. Actually, I did. I didn't buy today. And so I'm waiting till next week. My deposit comes in on Monday. And so then I might buy next week my $50. But right now I'm thinking about holding on because, as you can see from my transactions, I bought I bought the Fubo stock, and then I sold EA and SMCI, and I actually gained $40 from all these transactions. So over this week, instead of spending $50, I gained $40. So that's why my cash position is a little bit higher than it was last week, but I'm okay with that because I want to have a little bit of cash in case something just bombs and I just have so much confidence in it and I'm able to buy into it. So yeah, I'm kind of just going to hold on to a little bit of cash. The market is getting a little bit more greedier. It's on the edge of extreme greed. We've been right here for a little bit now. Once we tip over to extreme greed, if we do, then I would say start watching out for a little bit of a sell-off. Not a correction or anything, just a little bit of a sell-off. And then that'll probably push us back to neutral. This is the AAII sentiment, and as you can see, historically, we have a 37.5 bull percent, right? And then a 31% bear. Right now, we are slightly over on the bull side, and we're also slightly over on the bear side, right? And we're when it comes to the people who are usually neutral, we're under. So people are picking a side right now, either bear or bull. But it's definitely, as you can see, people are getting less bullish. I don't want to say more bearish because they're not. People are getting more neutral, right? As you can see, since the beginning of July, we're only at 21.9% people being neutral of the investors. Now we're almost at a 30, right? So the sentiment is changing from people becoming less bullish, but it's not necessarily people becoming more bearish. I mean, it is by 1% in the last 3 weeks or so, but not much of a change, right? Not much of a change, but we're still trying to figure out, okay, where do we sit at? I do want to go over one more thing before I go over some charts. The VIX. As you know, the VIX is the volatility index, and so you can look at how volatile stocks are. And as you can see, when this thing spikes up, that is a great time to buy. This was a great time to buy here in the end of March, early April, and then over here during the COVID, right? Those are like some great times to buy. Right now, we are currently way down here. We're in a calm state. Now, obviously, there's plenty of places where just because we're down here doesn't mean that things are going to go up or down, but it's just a good, thing to know that we're on this trajectory down. Usually these trajectory downs, they can last a little while, right? We have a big spike, but you still have a spike up. You still have these spike ups, right? Well, we haven't really had anything. We've had these little mini ones, but not really, not much. So I do expect a little bit of a spike up. And this is what I was saying, is that depending on how far we push this rally that we have going, I think that's going to determine how far it goes down and how much the volatility index goes up. Right now we're super calm, but I think we should expect a little bit of a bump in the VIX, a little bit like, okay, maybe a 1 to 2% drop here. That's what I hope so. Because if not, if we continue to go up, then it's going to be even a bigger drop. At the end of the month, at the end of the day, at the end of the year, whatever it is, I'm just going to keep investing. But this is just what I think is going to happen. And one of the main reasons why is because I'm looking at the Qs. And when I look at the Qs, I'm looking at, if you don't know already, I have these triangles. For all the lines going down, those are a 10% or more drop. And of course, the line up is going back to where it was. And then that line across, that's going to symbolize, okay, it went from, its all-time high, then it fell and had a big crash, and then it finally reached back to that all-time high and then broke those all-time highs. So it kind of gives you a timeline of how long everything took. And so one thing I did, I was looking at how long these days are, right? These days are, like 30, right now we're 31 days into the rally after we surpassed the previous all-time high. Right? Before that, then we had 83 the last time it happened, 175 days, right? And I'm talking about in between the triangles, right? So right now we're at 31 days, but we're also at about 5% already. This one was a 7%, but it took 83 days. So it's 22%, but 175 days. Now, the one thing that caught my eye is I can look at the days, I can look at all of that, but the one thing that I was really saying is how fast it's going. And so I said, okay, well, I'm going to look at the degree, right, the angle of how fast we're going up. And what I noticed is that we're only going as fast as the post-COVID crash. When you look at all these numbers, right, these are the angles. This is the degree of the angle, right? We have 54, I know that one's hard to see, 54 degrees, 71 degrees, which is right out of the COVID, right? We dropped really big in 2020, and then we came out of it, and then that was just a rocket ship coming out of COVID, right? But again, we had our all-time highs, then we crashed, then we came back up, past that all-time high, and then just continued to rocket up. That was a rocket ship, basically. 71 degrees. 65 degrees was the next. 57 was the next one. Then we have 63, 58, and currently we are at 72. We are at a 72 degree angle in terms of how this little rally is going. I think that's a little steep. Now, obviously, we had the COVID one, which was very heavy, but we did just have a very, very big crash. It was just as bad, almost as bad as COVID. When COVID fell, we fell about 28% on the Qs in 33 days, 28 and 33. This was 24 and 47. So it wasn't as bad, but it happened very, very quickly, just on tariffs, right? Now, obviously, people are like, oh, the economy and, we have inflation and stuff like that. But, it wasn't like COVID. COVID was like a worldwide shutdown event. That is 1 in 100 years. And yet we just are coming out of a crash that is fairly similar. But nonetheless, it's not the same. And, you look at the degrees and I'm like, I don't know. It just seems like we have to have something's got to, stabilize this line a little bit, right? It's got to flatten it out. And in order to flatten out this line a little bit, we have to have a drop here. So something has to happen in the next week or two. I'm even more convinced. I was saying I know in the next probably like 3 to 5 months, we're going to have a decent correction. We're going to have a correction for about 5 to 10%. I would say maybe up to 10%. We're definitely going to get another triangle probably in the next 6 months, right? That's 180 days. We're already at 31, so that'd be 210 days. And as you can see, all the way back to 2020, we have had none between the triangles, between 10% drops. We've never had 200 days. So we're almost guaranteed, you're never guaranteed, but almost guaranteed, the odds are in our favor that we are going to have a drop in the next 5 months of at least something 10%. It doesn't mean that you don't buy now, because the stock market could go up 10%. Just be, aware of this, be aware of it. And it doesn't mean to, for me, I want to invest every single week. Like I said, I'm going to be investing every week. I'm stacking my cash position a little bit more just because I didn't like feeling, okay, if I'm selling, if I'm depositing the $50 into the account and then I'm buying the $50 of stock, I'm really left with nothing in case something happens. So I just wanted to have a little bit of cash, but I think next week I'm just going to get right back on it, just $50 a week. And I bought $50 worth of Fubo this week. I just sold out of a stock that I bought the week previously, SMCI. And then I also I sold out of EA, which I had held on for 2 years, and I figured, hey, now's about time. If I want to just build my cash position without having to deposit anything right now, I'm just going to do that, and I'm okay with selling EA for right now. So again, thank you for watching. I hope this was, fairly easy to understand in terms of what I was trying to say about the angles of, the drops between the 10% drops and stuff like that. So yeah, just be aware of how the market is acting, how the market is feeling, because you have to understand the stock market is so emotional. It's like an emotional, my daughter is 10 years old, and I can just imagine what she's going to be at 13, 15, 16 years old. That's what the stock market's going to be. My daughter, 10 years old, and already, and she knows everything more than me, right? At 10 years old. 13, she's going to know more than everybody. That's how the stock market is, right? It thinks it knows everything, and it goes this way, it goes that. It's so erratic, it's so irrational, and sometimes you just have to say, you know what? I'm going to be the adult here. And I'm just going to make the right decision. I'm going to consistently do something, and I'm going to be sane, rational, so that's what you have to do with the stock market. It can be crazy sometimes, like when the tariffs announced, I was talking to my dad too, and I was trying to tell him, man, I wish I just had more cash to buy. And he was like, oh, it's different this time. Oh, no, this, and I'm like, look, I know Donald Trump is, he's a little crazy, in terms of the how intense he does things. It just rocks the market quickly. He brings a lot of volatility, and he brings a lot of, not fear, but yeah, he definitely brings fear. But he also brings that, people are, just major impact. What he says, he's aggressive and all that stuff, and it scares people, I guess. And the stock market got really scared. Nothing ended up really happening. I mean, we still have potential for tariffs. Tariffs are put on a little bit more, but nothing crazy. So again, just be ready, be prepared for anything, but consistently invest. Don't worry about the stock market going up and down, this and that. Do your game, do your thing, consistently buy into good companies, quality companies, profitable companies, or at least really good index funds. And so again, sorry for that last little rant. If you like these videos, please give a like and subscribe. I really appreciate everyone who does watch these. And thanks for watching. And don't forget to
earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.